Well, hi there, folks. Welcome to the program. This, of course, is Stinchfield, the podcast. What is it about the financial media? Have you noticed the negativity? I mean, I know the mainstream media hates Trump, but this is really about trying to destroy America, trying to destroy the American economy. But maybe there's more to their, what would we call it? The psyop of negativity. That's what my friends over at VRA Letter are calling it at Vertical Research. The psyop of negativity. Go figure. It's coming from the financial media. And then we get some good news. 5.4% the Atlanta Fed is projecting for GDP growth. That is blown out of the water expectations. So again, even coming in much higher than President Trump and Scott Bessent have predicted, this economy is set for takeoff. Now, I mentioned my friends at Vertical Research Advisory, vraletter.com. Listen, the reason I want you to go here is very, very simple. They have beaten the market. Let me get it right. 19 of 22 years since they started in 2003. 2025, returns on their portfolio, 36%. Now, I'm a member of vraletter.com. I get the email every morning. Folks, let me tell you something. What I love about this is its simplicity. So simple. We'll talk a little bit about that today. But before we dive into the psyop of negativity and we talk about where this bull market is headed, yes, I say bull market, I want to get the show started. Here we go.
Uncensored and unapologetic. This is Stinchfield. Here's your host, Grant Stinchfield.
All right, welcome everybody. As promised, my guest today, Kip Herriage. He is the CEO of Vertical Research Advisory. Kip, it's great to have you on the program.
Grant, real honor to be here. Thanks, my friend.
All right, so this is exciting, and it's our first podcast. I hope of many, many more to come. I am a financial, what did I say? I play around with it. Obviously, I have my own portfolio, but I like to fool around with this. I've been so excited about reading your newsletter every day. I've started to change my portfolio around because of your recommendations and because of your history. I'm going to talk about that in a little bit, but I want to talk about the Atlanta Fed, their expectations for GDP in fourth quarter. But first and foremost, you coined the phrase, the psyop of negativity by the financial media. What is it about them? What game are they playing here?
You know, we have a family business here, right? My oldest son, my business partner, we came up with this phrase about 3 or 4 years ago because we always saw was negativity in the press. Look, we have subscribers all over the world. And every email we were getting from people over the last many years has been, what are you talking about? We need to be in stocks. What are you talking about? We need to be in the markets. Don't you know this thing's going to crash? It was just nonstop negativity. So we did a lot of research into this. And we started finding these primary investing websites like Zero Hedge. And I could name about 10 of them, right? They're all dedicated to scaring the you-know-what out of people. And the more we looked into it, we realized that this was a psyop of negativity, again, what we've called it, and that it is planned. This is being forced on the American people, and on the rest of the world feels the same way. They're scared to death. And you think back to where we came from 2007, 2008. Look, I was out there 2 years in advance of the financial crisis and the housing crash on stages all over the world, telling people to be very careful that the housing market was in trouble and that you should not be over leveraged. And certainly if you had a bunch of homes, you should think about selling some. And we forecast the crash, and that happened in 2008. Well, since then, people woke up. The American people woke up, and we got our finances right. It's stunning what has changed with the American people. Our debt to household income now is at a 25-year low. People have paid out their homes. 40% of Americans have no mortgage. Wow. Average home equity in the country is 71%. Very few people know what I'm telling you today. And they don't know also that corporate debt to a market cap is at 50-year highs. Again, people have paid off their debt because they're scared to death of what's going to come next, which is good because they've gotten healthier. But at the same time, they're afraid to be in the markets, which is where you have to be in this kind of inflationary growth economy.
All right. So it's so interesting because you're telling me those things about home ownership. I like to think I'm pretty informed. I do it for a living every day. I don't know those things. So what's the motivation by these media outlets, specifically financial media, I don't know if CNBC plays a role in this. I don't really like CNBC. I'd rather watch Fox Business. But what is their motivation for this negativity?
Since you mentioned CNBC, I have to tell you that I boycotted CNBC starting 5 years ago during the pandemic, when Jim Cramer on air told everybody that the U.S. military should be used to forcibly vaccinate Americans.
Wow.
And the whole network was propaganda network for the pandemic. It was a pandemic. Now I think it's common knowledge that that was the case. And so, no, CNBC, they're not truth tellers. They're propagandists all the way, in my opinion. Again, I've done this now 41 years, so I think I have the ability to make a claim like that. I'm a regular on Fox Business and, of course, on your show and many others. And you're not going to get the truth for CNBC. But here's the reason, Grant, they're doing this. The wealthy, the elite, they want the average person out of the markets. They want you scared. They want you in cash. We have $7 trillion sitting in money market accounts. Again, people are scared to death. We have global GDP at all-time highs. M2 money supply all-time highs. $22 trillion in M2 money supply. That's cash and cash equivalents. Again, people are scared to death. And if the elite can scare us out of the markets, guess what? That allows them to buy stocks as cheap as possible. If it can scare people out of the housing market with all these claims that just aren't accurate, they can scare people away from buying homes. This allows them to buy on the cheap. And here's why they're doing it. The elite know what's coming. A bull market of bull markets. This is, Grant, as you know, it's what we've been predicting 3 years ago in a book called The Big Bribe. We wrote this and predicted that we were going to have a massive bull market that would take the Dow Jones past 100,000, NASDAQ past 40,000. The markets have doubled since then, but we're still only halfway there. We think we're in the roaring 2020s. This is the Trump economic miracle, as we've been calling it for years, and the elite would love nothing more than to keep the average person out of the market so they can keep buying assets on the cheap. That's the reason.
And so when they buy assets on the cheap, it goes up, but they own all of it, so they don't need to buy as much. Is that the play?
When they get ready to sell, they'll be telling everybody the bull market's arrived. Everybody should be in the market. You've got to be a contrarian really in this day and age to make money in the market. So when we see everybody telling you to sell, that the market's going to crash, when we see that as the propaganda, it makes us salivate. We have to be long stocks. You've got to understand how the markets work. I was very fortunate. My two mentors, Ted Parsons and Michael Metz, their mentors worked during the Great Depression on Wall Street. That's the lineage I come from. And I think everything I've done has prepared me for this era. And again, we had beaten the market 19 to 22 years, and we're very excited about the bull market ahead, which I think we'll get a chance to talk about some today here.
All right. Yeah. So when we look at this bull market that is ahead, you've got the one big beautiful bill. All those provisions are going to kick in. I've been talking about that a lot. Honestly, as a conservative talk show host, it's easy for me to talk about the one big beautiful bill, and I pump Trump up and everything's going to be great. Is there more to it than just that, or is that a big role in why we're headed the direction we are?
That's a big part of it. But, you know, in 2016, when Trump was running, I was one of the first financial guys to come out and endorse Trump. And I said that Trump would win. It would be called the Trump economic miracle. I've been saying this now for a decade. By the way, when I did that, we lost millions of dollars in business. The number of clients and subscribers that canceled their services with us was shocking. I'm a lifelong independent. Maybe they just didn't see it coming. I don't know. But again, the hatred for Trump, the TDS has been there for a long time in my world. But look, there's a lot more to it. It's not just the one big, beautiful bill. There's so much in there that's going to keep the economy soaring. But it's a combination of Trump's. The media is not talking about this at all. His tax cuts, his deregulation, mass deregulation, 15 deregulation cuts for every new piece of regulation. And of course, his tariff strategy, which we've been a proponent of now for years, is really starting to play out. The Supreme Court may rule against this on Friday. But again, they've got a backup plan in place. They have a plan B and a plan C. Again, don't let the fearmongers scare you out of the market by predicting the Supreme Court's going to rule against Trump, because it's just not going to matter in the end.
All right, what do you say to people that says AI is just driving all of this? I mean, I look at NVIDIA, I look at Broadcom, I look at Micron Technologies, and all of these stocks drive the market. Like wherever they go, it seems like the overall indexes follow these AI stocks. Is that where you're supposed to be right now? Is that the end all in this stock market?
It's a big part of it. It's leading, but as we've been telling people again for years, this is so much more than just about AI. And Grant, you and I have talked about this. This is about innovation. We've got what we called an innovation revolution that's taking place across not just the U.S., but across the world. And we're seeing the kind of technological change that you just don't see over a 100-year period. This is going to be change that happens over a 5 to 10-year period. And it's driving everything. And it's not just in technology, it's across every industry. And now we've got new industries that are being born, like the space travel, space tourism. The number of jobs can be created from this and from AI. To the people that are telling you, again, the fearmongers, okay, that are telling you that American jobs, the jobs market's going to be destroyed by AI. Let me just remind you that, again, this is what they like to do to scare you. Back in the day when Henry Ford was opening up his first car manufacturing facility, the New York Times ran a cover that said, the horse and buggy industry is going to be destroyed. Oh my God, the tens of thousands of jobs that will no longer exist, right? And we look back and then laugh at that now, right? But that's the analogy. There has never been a time, ever, in the history of mankind where new technology has created fewer jobs. It's always more jobs. So again, to answer your question, yes, AI is a big part of it. It's really about much broader than that, innovation, and it's happening over a very short time frame. You think the next 5-10 years are going to be remarkable? We actually think this bull market could go on for another 20 years. This is an amazing time to be an optimist, and we've got the right president for it too, Grant. That's I think really a big key here.
Do you think these AI stocks are still a buy when you look at Broadcom and Nvidia and stocks like that?
Man, this is a fun podcast. I got to tell you, I love the questions you're asking me because these are the key questions. Because everybody is saying, okay, it's a bubble here. It's the next bubble. Here comes the next market crash. We are in the first inning of a ball game that's going to go 16, 17, 18 innings. We are just getting started. We haven't scratched the surface of what these new capabilities are going to do for mankind. So again, yeah, I think investing in these, our favorite stock in this whole group is Tesla. We like Nvidia. We like Tesla. We've owned both for a long time. We've got big gains in them. But again, even in those two names, the gains are just getting started. That's our view, and it has been for some time.
You know, Tesla. All right, so I bought my son a Tesla when he was 16, the base model Tesla. He talked me into it. And I'm like, dude, those electric cars are too fast. It's too much power for a new driver. He's like, no, Dad,
that's true.
You can limit it. It has parental controls on it.
That's right.
So and he says, and all the safety features, and it does. And he talked me into actually thinking that it was actually a safer car to buy. But so I think of Tesla as a car company, but it's much more than a car company, isn't it?
Yeah. Yeah, it's a technology company. You know, this is in the next 6 months. And again, very few people know about this. I think you do, Grant. By the way, I just got the new Tesla Model S, the Plaid, and it will go 0 to 100 in less than 3 seconds. It's got something called drag strip mode. You literally have to have your head back against the seat rest because it just propels you. It's like you're in the fastest rocket you've ever. Yeah. It's crazy. Just an amazing piece of technology there. But yeah, they've got just this again by I would say by April, May of this year, they're going to be launching their cyber cab. Right, they'll be everywhere. People will stop having to own a vehicle. Your insurance costs will go away because you can call a cyber cab. It'll be there in 2 minutes. It'll get so much cheap. Uber and Lyft are in trouble. Okay, this is going to change everything. And then, of course, the Tesla semis are coming out. The Optimus robots are coming out, and I can keep going. There's about $10 trillion divisions inside of Tesla right now. And the entire company is valued at $1.5 trillion. So we think this stock is a grand slam from here. Again, it's already had a big run, but we think again that's just getting started. It's our favorite. It's our favorite tech stock.
They're even in the insurance business. When I bought the car, it was easy for me to put my son on the insurance, not even go through my insurance guy. And I did that, and it's funny because it scores you. I don't know if you have it, but it scores you. It's a little Big Brother-esque, right? Because it's seeing how you're driving and for my son, that's fine because I don't mind being Big Brother watching my son. For me, not so much. Well, his rate was as low as it goes. He's a very careful new driver. Let's put it that way. So his rate got like so low. It's like $110 a month or something for my 16-year-old son because he has a score of 100. Well, I drove it for one day. My car was in the shop. And the rate went up to 125. And he's like, Dad, you ruined it. And it showed the days that I drove it. But that literally is like free markets at work where you're charging someone off of their behavior and and judging their risk. It's pretty amazing firm.
It is, and Elon Musk is. You don't want to be on the opposite side of Elon Musk. I think in any debate or conversation or product launch, it's good to see him back on board with Trump. That's a very good thing to see. Those guys, probably the two most amazing people of the last 100 years, and how lucky are we to be able to be around at the same time they are. Again, we're very optimistic, and I got to tell you, a little off topic, but I think you'll appreciate this. I know your personality from watching your show. You're an optimist, right? And you see the best in people while you also recognize what the reality is that we're living through. But I got to tell you, I can't think of a single person in my lifetime, I'm 63 now, that I've respected and that wanted to emulate, that wasn't an optimist. And so you look at Trump, you look at Musk, and they just exude optimism. It's always about the future. It's about America being the best place on the planet. It's about the golden age of America. We believe all these things are taking place. And I just tell people, you know what? Don't avoid pessimism and avoid pessimism as most as you can. It'll propel you for the future.
I'm so glad you saying that you see that I'm an optimist makes my day, because a lot of people will say I'm a pessimist, but the only reason they say I'm a pessimist is they confuse my skepticism for pessimism.
Right.
And that's not the same thing at all. I'm a huge skeptic, but I'm also very optimistic about the country, the people we have in this country, firms like yours. What I love about your firm, and I tell this to people out there all the time, if you want to be successful in life, you've got to help others. Your firm, Vertical Research Advisory, VRAletter.com, folks, for anybody that wants to find Kip and his team, VRAletter.com, is all about helping people and reach their potential from a financial perspective. And that's where I think you got to be in the world today.
I come from the second America. I actually tell people I'm probably third America. We were so broke growing up. We didn't know it, of course, at the time. You're growing up, then you start getting a little older, going to a friend's house, you realize, wait a minute, I grew up in a mobile home. What are my friends doing? They have a regular home. You can't move it. What's going on here? But I decided at a young age, I liked investing. I got it at a young age. It made sense to me throughout college. So I found my way to Wall Street. I was vice president. Youngest vice president of Oppenheimer by the age of 25 years old. And again, had great mentors. It's like my whole career feels like it's been laid out for me. And as I say, my wife works in the business. Both of our sons do. And education to us is really important. I'm not a fancy guy. I'm not the smartest guy in the room, but I've learned from my mistakes. I know how Wall Street works, and I know that they're not there to help most people. Look at the amount of money these CEOs make. And you know that they don't care about their clients. And I'll tell you something else, and everybody will probably understand this. You look at your monthly brokerage statement, look at your 401ks, you're like, how is that not keeping up with what they say we should be making every year? There's a lot of fraud in that industry. Again, I left it in 1999, retired from Wall Street at 38 after taking 7 companies public, raised several $100 million on Wall Street. Again, I love what I did. But there's a shelf life to it, I think, if you're a decent, honest person. So I was glad to get out of New York and come back to Texas. We're red-pilled American patriots here. We don't apologize for it. And we do believe that by helping others achieve success, that great things happen for you back in life. It's a boomerang effect, Yeah.
Well, it's so true. And I love the fact. I mean, if you think about people that I align myself, especially with the podcast, they're all companies that embrace the idea of conservatism and individualism and limited government, and they're unapologetic about it, which is what I love about your company, that you are. And you know what? I'm sure you'd be happy to send your newsletter to liberals. They might learn something about it, but I'm sure conservatives flock to you.
We do. Again, I'm a lifelong independent. I voted for both. It's been a while since I voted for Democrat because the party's gone literally insane. I mean, there's a party of insane people now. But I would say we're 80 to 20. We're 80% probably Republicans here, 20% more liberal side. We don't talk about politics a whole lot. Our goal here is to help people make money. Our goal is to beat the markets every year. We're addicted to that. We're locked in, man. This is what we do day in, day out. We love what we do here. Anyone's welcome. But we have started picking up a lot more Trump fans than we had before.
Look, I mean, I'll just put it bluntly. If you have $1 million portfolio, say you're in your 50s, you had a 401k, you did well enough, and you got $1 million, You guys did 36% last year. That's $360,000 a year you would have made off your portfolio. I promise you, if you're in your 50s and 60s and your portfolio is $1 million doing it right, you probably weren't making 360 grand a year. And now you're doing even better than that. And this is a long history of that. It's not 2025 was not just a one-off. Am I right, Kip?
That's right. We've averaged right at 30% a year, which, by the way, is right there with Peter Lynch, who's the best of all time. He did 28%. We've beaten Warren Buffett essentially every year of the last 20 years. And I'll just make another point. We're also big fans of gold and silver, and we've made a fortune in this group. Okay, I got to share this because if you'd only bought gold, I think the gold bugs. I know. Look, there's a lot of us older folks that we love gold and silver, and we were just crapped on forever for owning because it didn't do anything. But if you just own gold from 2000 on, you would have beaten Warren Buffett hands down. And he hates gold, right? He hates gold. He hates Bitcoin. We've made a fortune in both of those. So I think, the goal is to keep an open mind. I will tell you also about gold. Again, one of our favorite investments, the gold miners, which we've done incredibly well in. If investing with your money in a savings account, please hear me on this, people, because this is something we have preached to our clients and subscribers now for a very, very long time. Get your money out of bank accounts and savings accounts and money markets and save in gold instead. Here's the math that backs that up. If you say you had $100,000 in a bank account and 2,000, all right, in the last 25 years, that $100,000 in your bank account after inflation would be worth $100,000. After inflation, you'd have made no money whatsoever. If instead you had that money invested in gold, physical gold, we don't use paper gold here, and we don't sell gold, by the way, we just recommend it as an investment. But that $100,000 in gold today would be worth $1.3 million from just making a decision to save in what is a real currency versus the funny money that's being printed into oblivion.
I'll tell you a funny story. A friend of mine got a divorce, very wealthy couple, gets a divorce. It was a brutal divorce. She gets $1 million in gold from the husband. She's like, he's paying me off in gold with some of the. She's like, what do I do with this? I said, you hold it. And so sure enough, in the last year and a half, you better believe she's glad she listened to me when I said you hold it. I don't know. It's up like 40% or something, I think, right?
65% in the last year. Silver's up 140%.
Yeah. Amazing. So gold, and you guys started recommending this. It was $350 an ounce, and silver was $5 an ounce when you first started this, correct?
2003. That's when we first recommended both. That's right.
It's unbelievable. Let me just tell people, and I want to put the website up on the screen here, vraletter.com. Where is my little graphic? vraletter.com. That's vraletter.com. Kip and his team send out an email every morning. And I'll tell you, it's fabulous. It tells you right where you need to be. It's very simple. And Kip, I think you'd agree with me. It's not a day trading system by any means. You might have to unload something or buy something as you change some recommendations around, but you're not making 5 trades a day or even 5 trades a week with this system, are you?
No, that's a great point, Grant. Now, we're position builders. We're long-term investors. The money is made in the waiting, right? And look, we do have short-term trades. We actually have a trading program for ETFs because we have a market timing system called the Vertical Research Advisory Investing System, and it helps us time the market so we know when to be long, when to be out of the markets, what sectors to be in, what stocks to be in. But no, we're not short-term investors. We're long-term investors. And I also say, since you've got the site up there, we've had this in place now for about 2 years. Come sign up at that site. You get 2 free weeks. You get everything we have. You'll get all of our daily letters, our special reports, our portfolio. We list every trade we've done for a decade in our back office. So you can check everything to make sure what we're telling you is accurate. Complete transparency here. But again, everything we have for 2 free weeks if you sign up at vraletter.com.
How does that ETF trading system work? I'm curious about that.
Well, we use leverage ETFs, which means they're more aggressive than normal, but that's where the juice is. That's where the returns are. So very simply put, we have a market timing system. When a certain ETF or certain sector, if you will, of the market, like right now, I just wrote this up today, The housing sector has gotten so cheap. Trump was just now been talking about it. Today, that group was up 14%. We are aggressively long the housing stocks and think they're going to have an amazing year this year. So we buy a leveraged ETF in the housing sector, a housing ETF, and then we look to trade it. We'll probably own this 3 or 4 months. That's kind of our average holding time for ETFs. Last year, we felt the same way about mining stocks. And we hold that we invested in the ETFs that own gold, the gold miners. And again, we did very well in that. We owned that for the whole year. We made 160% last year in that. And so that's how it works. We look for a group to get really oversold, then we look to buy it, and we have our other indicators that say when it's time to take profits.
So that system then is more of a weeks, months system. Again, it's not a day trade system.
That's right. Yeah, we do have an options program for those that are more aggressive, but that's not most people. We limit each program to like 100 people in that, and those are 4-month programs. So that's not what we're talking about here. The very letter is long term. Again, we're position builders and opportunity traders, as we call it.
Got it. Okay. The other thing that I wanted to ask you, because I was looking at the email you sent me, and you talked about the big 3 themes. We've talked some of them. The Trump economic miracle. We could put the big, beautiful bill in that. You've got the innovation revolution. We've talked about AI. You say here, and I think we kind of touched on it, but the ocean of liquidity. Is that the people that are on the sidelines you're talking about, all that money that's sitting in money market accounts all across this country?
That's right. Plus, again, in home equity, there's $35 trillion sitting in home equity right now, which is fantastic. People are paying off their homes, but that's not normal. People normally use their home equity to buy another home or to make other investments, right? And so they're not doing it because they're scared to death of another crash. And again, that's because the fear mongers have got them, this afraid. But again, it's that liquidity that's sitting out there, as we call it, an ocean liquidity, that's supporting everything. And until people start coming off the sidelines and getting much more bullish, this bull market is just beginning. That's just kind of a common sense, contrarian way that we look at the markets.
Yeah, it's amazing stuff when you think of it. You call it a structural bull market, and would be massive for 2026, which means if you're not in the market, you're crazy. So you talked about people with money in savings accounts. I'm just going to ask you. I'm 56 years old. I've got a decent amount of money in stocks and those kinds of things. I've got quite a bit of cash sitting around right now. What should I do with that? So you saying don't worry at my age, put it in the market?
Look, we recommend gradually increasing the amount you've got. So you're not just throwing it all in at once. If you do that and you buy at a market top, it's so painful. I put all the money in. Oh my God, we had a big shakeout and now I've gotten crushed. We recommend gradually taking money until you get more and more comfortable. We start to see the gains begin to build. And again, as far as cash goes, look, folks, if you just are more comfortable holding cash, I'm fine with that. But it's melting away in fiat currency. Take a look at owning physical gold and silver. There are a lot of great firms out there that work in, again, we don't sell that. A lot of great firms you can buy physical gold and silver from just to get it out of your bank accounts, because it's going to continue melting away. They're just going to keep printing money. They have to.
Let me ask you, this is totally off topic, but when it comes to buying and selling gold, the difficulty seems to me with the fees that come along with it and the percentages. So you buy it, but then if you want to sell it back to them, they take a big fee out of it.
Right.
That's right. How do you navigate that?
There are also ETFs that you can buy that invest in physical gold and silver. You don't have to. When I say physical, I mean don't buy these paper ETFs like GLD. If you're an investor, you'll know what that is. SLV. These are the paper ETFs that are just not worth the paper they're printed. One of these days, they're going to blow up. And I think that's what our long-term target in gold is $15,000 an ounce. Right now it's $4,500. We think silver's going to $200-300 an ounce. Right now it's about $67. But you don't want to own those paper ETFs. You want to own physical ETFs. We teach people what those are here.
Got it. It's great stuff and fascinating stuff. I'm so looking forward to this relationship with you guys. Let me again put it up on the screen, and if you want to start taking advantage of, as you said, 2 weeks free, and man, you will get an awful lot from that, from just going on to vraletter.com. That's vraletter.com, and if you heard me say it before, nearly 36% they did in 2025. What are we in 2026 now? I can't believe it. 2025, 36%, 19 of 22 years beating the market since 2023. VRAletter.com. That's the website to go to. Kip Herriage, great stuff as always. I'll see you on the Real America's Voice show, I'm sure, very, very soon. And God bless you, man. Have a great weekend, okay?
Thanks so much for having me on, Grant. Really appreciate it. It was a lot of fun.
Absolutely, and we'll do it again next week for sure. I hope this becomes a regular thing because I'm fascinated by it all. You know why I'm fascinated by it, folks? Because I love making money, and that's not a bad thing. I'm proud of it, and I can use it for some awful darn good. And you know what? Quite frankly, I use it for some fun too. Don't kill me for it. All right, VRAletter.com. That's VRAletter.com. I'm Grant Stinchfield. I'll see you on the Real America's Voice show tonight. A special edition. We're live with Steve Bannon at the Gaylord Texan. We've got a huge event with Patriot Mobile talking about the Muslim takeover of not just America, but Texas as well, specifically. So we're going to have a big event there. We're going to do the show live on the road at the Gaylord Texan. So tune into that tonight. I'm Grant Stinchfield. Thanks for watching.